Good morning, my friends. Today is Monday, July 25th. I'm Marv Eisen of Timeless Dollar Trading Academy, and we start out the day looking at the economic calendar for the week. And the action will be here on Wednesday, where the Federal Reserve announces their target rate, and the market is expecting a 75 basis point rise in interest rates. That's 0.75%, following on the heels of last month's high interest rate rise as well. So rates are rising sharply, and that's going to put a damper on the economy, which of course it's designed to do. So moving over to the morning news, we see flags are in the green, but don't let that fool you. The S&P is up 12 points, which is basically flat, right? And why do I say that? Well, because of the daily range. I'm going to get to that in a minute. Oil is down, it's under 196, 10-year treasuries 2.84, but of course the prime rate is I think 4.75. Nevertheless, let's move over to the chart. Now, one of the things, and this is the Emini from Friday, July 22nd, and I'm not going to show you my chart for today because, you know, I lay out my chart using the trading zone that I calculate, and it takes a good amount of time to do it each day, and I provide these numbers as a subscription. But I want to speak about this for a bit because I know most of you trade according to, I think a lot of you are scalpers. You know, the market goes up a little bit, you figure it's going to go up a little more, so you jump on, or down, or it goes down, you jump on. Sometimes you're right, sometimes you're wrong. You pick up a point or two. Okay, but let's look at the big picture. Let's look at the big picture. Every day is represented by a candle, right? I mean, we've all seen a daily candle. This is a 3-minute chart of the E-mini, and there are 10 points between each horizontal line, just to give you a frame of reference. And this is, again, from Friday, July 22nd. And every day is represented by a candle. Now, what's that candle? That candle is the range that prices trend toward during the day. It's the range, not actually the trend, but the range that the prices move in. And even on days that are doji days, where prices end up at the same place where they start, there's still a range where the shadows represent the full range of the day. Now, here are my trading zones for the past several days, and I want to point something out to you. The market goes within a certain range each day, and the range plot is part of the work that I do in determining the trading zone. And the trading zone support down here at 39.55, for example, on this particular day, and 40.24 is a 69-point range, representing a 69-point range. Now, I'm going to go back another day, and go back another day again. The market opens up, traverses 69-point range. Now, remember, I put this trading zone on my chart before the day even begins. So this is an area where I calculate the market should trade. Now, is it my guesswork? Is it my estimation? Am I some kind of a guru, a Karnak? No. These are numbers based on Taylor's trading technique, where George Taylor, back in the 1950s, saw that the market trades a certain number of points from a low to high, and then from a high to low, from one day to the next. And taking these numbers and averaging out certain parameters of these numbers, and there are 12 calculations involved, you come up with two main numbers, a support number and a resistance number, okay? So in between those two numbers is a range, okay? And as we can see, the market does indeed traverse a range every day. It starts out at one end and it ends up at another end, okay? Very basic. You don't have to be a genius to know this. Again, a range. This day was sort of curtailed for whatever reason, but the trading zone provides me with targets because the resistance and support levels are also target areas that the market generally reaches and respects. And I use these as targets, as price targets, because I don't generally trade as scalping. The previous day, here's July 19th, and here's the range. Well, you see, it started out in the middle, but it ended up here. What's the range? Okay, was the range wrong? No, because look, if I take my trading zone, I'm going to copy this. and I transpose it, okay, from the low, I'll start out with a low and to the high. Here's the range for the day, from the low to the high. So you see, if you knew where the intraday low was, or the intraday high was, and you knew what the range was, you figured that the market is going to go that many points from the high or the low, right? Simple. Nothing complicated. I'm not talking about trade setups here. I'm talking about simple observation of how the market trades, how it moves. Okay? Here's a trading zone. Look at this one on July 18th, where prices, not only did they come down for the day, but look, they absolutely touched the support line of the trading zone, the support level. These numbers are invaluable. Took me a long time to learn this. Okay, here's a day where the prices were way outside my trading zone. Okay, can happen. There's nothing perfect in the market. Generally, the trading zone is going to tell me where the market is going to trade on any particular day. On this particular day, it didn't. But on days like this, I use my knowledge of how to use the trading zone. I transpose it to the intraday low or the intraday high, and I know the market is going to traverse roughly that many points, and I use that in my trading. Okay, another trading zone. If I take this and I move it down to the intraday low, you'll see that the high comes up to my 67-point range. So every day I plot a range, okay? So the range is important. Looking at the overall picture, you see that trading, if you look at the big picture, let me go back here. Trading, looking at the big picture, you can quantify the market. And if you want to get these numbers, if you want to learn how to calculate the trading zone, and I've got to tell you, you can do it. You can buy Taylor's trading technique on Amazon. The book is a difficult book to read, and the numbers are even more difficult to comprehend how to put them together. But the pros do it, and I took the time to do it, and it took me years and years to learn that the market does have targets that it reaches, and those targets can be quantified and put on a chart in terms of a trading zone, which tells you support, resistance, and a range for the day. And if you want to know where to get them on my site, you can go to my site here under Emini courses, daily trading zone subscription. You can get a subscription. And in fact, you can use it free for the first week. And it's not expensive on a monthly basis. You can quit at any time, but try it free for the first week. It'll make you a better trader. Okay, so that's my video for the day. I'm not going to get this up in time for the market to be open, but nevertheless, most of you I know are either trading, working, doing something. So I know that you'll see it sometime during the day. So thanks so much for watching. Trade with lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Style.